During the recent AIPCon customer conference, Palantir took the opportunity to showcase the full scope and potential commercial applications of its AI offerings. Among the attendees, Wedbush analyst Dan Ives stood out as particularly impressed by both the diversity of Palantir's customer base and the promising prospects for future success across a range of industries, including financial services, oil and gas, transportation, manufacturing, healthcare, software, and services. Palantir's foray into the commercial sector underscores its ability to diversify its revenue streams beyond its traditional government contracts. By leveraging its comprehensive PLTR suite, clients can achieve substantial improvements in productivity, resulting in enhanced operational efficiency and an expanded landscape of growth possibilities. Ives holds the view that Palantir is strategically poised to capitalize on the positive spending trends expected in the commercial sector during the latter half of 2023 and throughout 2024, firmly positioning itself as a formidable player in the expansive $1 trillion AI global TAM total addressable market. However, it's important to note that while Ives maintains a bullish outperform rating on Palantir's shares, not all analysts on Wall Street share the same degree of enthusiasm. The current consensus rating for the stock is a hold, comprising 6 holds and 6 sells alongside 3 buy recommendations. Moreover, a significant portion of analysts consider the shares to be somewhat overvalued, with an average price target of $13.88, indicating a potential 8% decline over the coming months. Palantir's stock has experienced a remarkable surge of almost 140% this year, primarily attributed to robust earnings performance and growing interest in artificial intelligence technologies. The introduction of ChatGPT in November of 2022 had a profound impact on the AI sector, which resulted in a substantial 64% year-over-year rise in AI-related mentions during various Q1 earnings calls as corporations enthusiastically embraced AI opportunities. Palantir's stock jumped in price following its Q1 earnings, which surpassed expectations, and this led to ARK Invest increasing their investment in the company. Nevertheless, this surge in the stock price has raised conspicuous concerns regarding its valuation. Now, let's delve into the reasons why exercising caution may be prudent, not only with Palantir, but also with other high valuation growth stocks of similar nature. From a pessimistic perspective, Palantir achieved its 3rd consecutive profitable quarter, posting a net income of $28 million. However, its earnings per share remain modest due to its historical emphasis on growth at the expense of profitability. Despite a 13% year-over-year revenue increase, expenses have also escalated, leaving profit margins unaltered. Currently, Palantir enjoys a favorable market reputation, but uncertainties still loom over the company. For instance, Richard Gardner, CEO of Modulus, underscores evolving AI regulations as a significant source of uncertainty for AI software developers. The future is shrouded in uncertainty due to ongoing AI advancements and the potential for regulatory changes. But as a key player in this sector, Palantir has reaped the benefits of the burgeoning interest in AI. However, the sustainability of stock price appreciation linked to this trend remains unclear. The company garnered attention for its recent collaboration with Babcock International, providing data-driven solutions to the aerospace industry. This partnership involves real-time issue detection and leverages deep data for military equipment monitoring, heralding a new era in modern defense capabilities in the UK. Subsequent to this announcement, PLTR stock exhibited relatively stable trading. Nevertheless, it's worth noting that the stock has more than doubled since the beginning of the year. These types of catalysts can induce short-term price fluctuations, but recent stock performance suggests that investors are adopting a more cautious stance. The company's free trial sales model, which is designed to showcase product value, demands substantial resources for customer acquisition and presents challenges when scaling globally. CEO Alex Karp's faith in self-selling software, while effective in the government sector, has posed obstacles in acquiring commercial sector customers. So, what's the best course of action now? Impressive technology doesn't invariably equate to a favorable stock performance. Palantir's elevated valuation in relation to its growth prospects and associated risks is a cause for concern. Despite a substantial 143% surge in 2023, PLTR stock still lags 60% behind its 2021 peak, underscoring its volatility. Given recent management decisions, divestment may not be an unwise move at this juncture. Indeed, history shows that nobody has suffered financial losses by booking profits after significant upswings. Palantir stock may face hurdles in the future, partly due to uncertainties regarding its guidance and the dynamics of profit-taking. For the time being, it remains a speculative stock worth monitoring until it can demonstrate its ability to sustain robust cash flow. Furthermore, the company boasts a robust balance sheet, fortified by a substantial net cash position of nearly $3 billion and a leverage ratio comfortably below 10%. Liquidity metrics are comfortably in excess of requirements. This financial fortitude positions the company favorably, affording it ample resources for continued organic growth and strategic acquisitions. Anticipation is building for the upcoming earnings release, scheduled for November 7th. Expectations for quarterly revenue are pegged at $556 million, reflecting a robust 16% year-over-year growth. The forecasted expansion in adjusted earnings per share from 1 cent to 6 cents augments this bullish sentiment. My bullish outlook for Palantir is further fueled by compelling operating metrics. The company has achieved a noteworthy 38% year-over-year increase in its customer count, which I regard as a strong indicator of bullish prospects for investors. The expansion of the customer base enables Palantir to enhance its financial performance significantly, given its diverse array of product offerings. The availability of a wide range of products and modules facilitates robust cross-selling and upselling opportunities. Therefore, it comes as no surprise that billings growth has significantly outpaced the increase in the number of customers, with an impressive 52% year-over-year growth. It is also imperative to highlight that the average trailing 12-month revenue per top 20 customers has expanded by a notable 15% year-over-year, affirming my thesis regarding substantial cross-selling potential. In addition to the company's internal strengths, the broader industry landscape appears promising, with strong tailwinds expected in the big data analytics market, projected to grow by an impressive 13.5% annually. Palantir's growth trajectory aligns favorably with the rapidly evolving dynamics of this market. It is noteworthy that the utility of big data hinges on powerful analytics tools capable of extracting meaningful insights from vast data sets. While I haven't personally used Palantir's offerings to form an opinion, the fact that the Pentagon, a significant customer, has entrusted Palantir with its analytics and decision-making requirements speaks volumes. Palantir secured its inaugural major Pentagon contract 4 years ago and has since secured numerous other military contracts. In the business world, suboptimal decisions may result in financial losses, but in a military context, these decisions can be a matter of life or death. Thus, the choice of Palantir by the world's most powerful military organization to enhance its analytics and decision-making capabilities underscores the company's quality and reliability.